Hello friends, welcome back to ICT Trading Concept. Before going further, please let me know that you can hear me perfectly. Just write it down quickly, okay? And voice is okay or not. Just a quick message or a quick comment. You can hear me or not. Okay. Sound is good. Thank you. Ronald Diego. Waiting eagerly. Oh, sorry, brother. I just take little much time. I'm sorry for that, man. Thanks for waiting. Midnight Open has really helped me. Okay, that's cool, man. That's cool. So, Remy, sound is fine. That's cool, man. Good evening, Botoloto. Good evening, brother. And good night as well, because it's night already over here. Yes, that sound is good. Thank you all. Now, we have, I think, 30 minutes left before starting today's morning session. So, I would like to come here and over here, okay? Time to, when I have actually tweeted this message. Time to read the price. All I have sell side. Today's expansion day. I got fake move to the London session, expecting lower run to the New York morning session. So I was actually expecting lower run to the morning session. Hey Dre, how are you, brother? And I just posted this screenshot. I was expecting price will come here, then it will retrace. Okay, so that was the specific place over here. Here, okay. When price come here, I was expecting a lower run. Now you can see price went little lower from 15 minute chart. It went little lower. Then we had a news price went higher. Now, how do we use this 15-minute chart for our 1 minute execution? Okay, I would love to share it with you. When price came here, I was expecting price will go lower. Why? Because this was the inversion fair value gap according to me, and I was expecting a lower run. And the little move that's enough for me to take an entry. I would love to show it from here as I don't have the chart over here. So over here, okay. So this is the specific, that moment when price, I was expecting lower run from the USD. I was expecting price will go lower from DXY. So here I was expecting price will go higher. Now I was little hurry. I took a entry over here. This is Euro USD. Sorry, US 100. So I actually push my button over here, but it take over there. And then I got stopped out over here because my stop loss was covering this last parallel gap. When this candle came, I got stopped out, but it's okay. Then I went outside, but if I were here, I would take that entry one more time. Okay, losing entry is always going to happen. I would see this. How do I see that? Just remember this one. I will just explain the setup from the NQ. That will be easier for me. So you will also understand what was my thinking about that. I'm just going to NQ. And this is the moment, okay, when I took my buy over there. I got stopped out over here. And what price has done after that? You can see this is the last parallel gap from the 1 minute chart. This was the last. Let me actually mark it. Price over here. When price came here, it went higher from the US 100. It was much more perfect. So that was my confidence that market is going higher. But if I could see this price action from NQ, maybe I wouldn't take that entry from there. I would wait for more price action. But what happened? It happened. So that was the run. Price went lower one more time. If I put my stop loss below this low, I would be okay because price never went below that low. But I just covered this parallel gap because that shouldn't be traded. But I got a stop out over here. Then when price went higher one more time. Now this high, when it is shifted by this displacement, I think nobody has any confusion about this displacement. This high, it has traded that parallel gap. I was expecting dollar will go lower. So I am expecting NQ will go higher. Where is your entry point? There is your entry point. So if you can take your entry over there, and if you come over here from 15 minute chart, From 15-minute chart, you can see the last fair value gap over here. I mean, below this swing low, this was the last fair value gap. I mean, one fair value gap is over here, and the last fair value gap is here. This is the another fair value gap. So you have to take a partial at that area. This should be your partial area, and your trade should you should hold your trade until that area. So I'm going back to 1-minute chart one more time. Here is your entry. You should take your entry over there. You have to cover, I mean, this low the candle has made, or you can put it over here. That is okay as well. That should be your partial area. That should you should hold your trade over there. If you take your partial over there, how many handle is it? Kind of 28 handle, man. It's not small, it's huge. And after that, when price came here, it failed to take that high. It started to go lower. Maybe you will be stopped out somewhere here, because you will trial your stop loss from break even to here somewhere, okay? Because it failed to take that. I mean, you will be stopped out here somewhere. So do I need to go over there one more time. Do I need a big run from 15 minutes? Do I need to take all of this thing from here? I don't need. I just got a move from 15-minute chart that helped me to take my entry over here. I'm just repeating this thing. I was little hurry, so I got stopped out over there. Then I went outside because that was outside of the session. So I wasn't interested to do anything. And if I just show you my account history, actually just don't look at the amount, because I was just taking two contracts from US 100. That's why the amount is something like this. So from Monday to Wednesday, I got first loss over there until today. Okay, so it is what it is, and you can see price has actually taken the liquidity now. Here, so this is the last 15-minute fair value gap. Price has taken the obvious sell side liquidity from there. What I have now, I have clean buy side liquidity. See the price action. I'm just going to remove this one. This is for next, okay, and I'm going to remove all of this. So prices over here, it has taken the sell side liquidity. This low, those lows has made this sell side liquidity much more stronger. Price has taken that sell side liquidity. Now I'm expecting price will go higher because I have very clean buy side liquidity. Okay, and below here I don't see any sell side liquidity. But as this is the expansion day, obviously it can expand. We will wait until 9:30. The another thing is we have this midnight open. Okay, so price is already below this midnight open. So I'm seeing this is actually the manipulation. Now another thing is we got a lower run. Okay, we got a lower run at the London session. So if I am expecting higher run at the New York session, this is the opposite run. So this is the fake run. I'm gonna read your comment. Please just give me some more time, okay? I'm sorry for that. We actually got the lower run. I mean, see, overnight at the London session, we got the lower run. Now here, little retracement, price went lower. It has taken all of the sell side liquidity. Now I'm expecting higher run. How do I change my expectation? If price would love to go lower, I will do nothing today. Maybe I will do some scalp, but I will be here with you guys at the morning session, so I will see. But if it would love to go lower, I'm not interested to take any kind of sell. I'm only interested to take buy. Why? The reason is I have only the buy side liquidity. I don't have sell side liquidity. That is much more cleaner. So I need to see that price would love to go higher. Now I will go to dollar index, and I think I can remove this. And I guess you got my point from there when I have tweeted this, that I would love to see some kind of lower run on candle will give you a perfect setup that will help you to be profitable. Okay, you don't need a big run come here. You don't need that. You just need a small run, one candle. That is enough for being profitable. I guess you will understand my concept over there. Okay, if you don't understand, please let me know that you didn't get it. Now I will just read your comment. Audio soft. uh, Malik, traders, I mean, audio is soft. What do you mean by that? I mean, is it okay or not? I mean, if it is not okay, I think I have nothing to do. Okay, I'm sorry for that, but I guess it's cool. I mean, you can hear me perfectly. Voice cat, hey brother, how are you, brother? If the last 15-minute travel gap can't hold, what should we expect? We should expect the lower run. We should expect the lower run. I'll just go back over there. Here, sorry. So this is the last 15-minute travel gap. I have to go 1 minute chart. I have to see from 1 minute chart if it can hold it or not. Now it went little lower. You can see it went little lower. It made me confident that market will go low. Okay, by watching only the fair value gap, last fair value gap. But below the last fair value gap, I have this very nice sell side liquidity. So I will think actually market went little lower below the obvious 15-minute last fair value gap to take only the sell side liquidity. So the reason was it was actually interested to take the liquidity, not I mean the it is not actually breaking this last 15-minute travel gap. It is actually went lower to take the sell side liquidity. Not getting. You are not getting. Okay, I'll just repeat this thing one more time. Okay, I guess it will help you to understand. This is the 15-minute travel. I mean 15-minute chart. Okay, price came here when price was over here. This was the inversion travel gap. So I was expecting market will go lower. Now, how long it will go, where it will stop, I don't care about that. All I need a run, very small run. Okay, so don't look this price action. Don't look at this price action. Just look these two bear candle. Price came here, it went lower. So two bear candle. I got two bear candle. Now, if I go at this time, okay, at this time, I just think I'm here to the Nasdaq in 1 minute chart. I'm expecting dollar will go low. So what should you expect from NQ? NQ will go high. This is more obvious. Now, prices actually came here. This is the time when price was going lower. At the same time, dollar was going higher. To that specific, I mean, fair value gap. Dollar was going higher to that specific fair value gap. At the same time, NQ was falling, falling, falling. Where did it came? It has taken this sell side liquid, okay? This low, all of those lows. This is relatively equal lows and some other equal lows over there. It has taken all the sell side liquidity. At the same time, it came to this 1 minute last fair value gap. This is the 1 minute last fair value gap. So it came to this fair value gap. Now what should I expect? Dollar already at that moment, dollar reached at that fair value gap. Just a second. I think I just removed that one. Whatever. Dollar actually at that moment, dollar reached at that specific fair value gap. Wait to go, I guess. From here, this I'm just talking about this fair value gap. I was expecting something like this. From here, price will come there and then it will go lower. So that was my expectation. So when price come here, I was expecting price will go lower. If it would love to go lower, other market will go higher. Now I'm coming this now NQ market. From NQ market, when I'm expecting dollar will go low, it should go higher, right? So it has taken this sell side liquidity. It has traded this fair value gap. All I need a market structure shift. Now this is not a market structure shift. To be honest, I was in US 100. So according to US 100, I saw a market structure shift. But if I saw that price action from the NQ, I didn't take that entry because that high is not valid for shifting market structure. If you ask me why, because this high didn't trade any fair value gap over there. I don't have a swing high that is lower than that swing high on my right. But on my left, yeah, I have a swing high on my left. But I don't have a swing high that is lower than that swing high on my right. So this swing high is not valid for shifting market structure. Now, if I go to in US 100, you will see from the US 100, okay? Okay, yeah, it is US 100. So Over where was that? Okay. So I just let me show it to you if I can or not. This high, this high is little bit higher than that high. So I had a swing high on my right. I had a swing high on my left from US 100. Now US 100 doesn't actually provide the accurate information. So I am not going with US 100. I will go with NQ as I don't have the data. So I was actually analyzing the market with here. So I saw this is perfect market structure shift. That is why I was interested to take my buy, and this fair value gap that should work as a inversion, I mean sorry, breakaway gap. That's why I put my stop loss below that fair value gap, but I got stopped out over there. But if I go to NQ, you can see it is not a valid market structure shift. So I should have wait for more information. Then price went lower. It went lower one more time, came to that last fair value gap one more time. Then I got this market, perfect market structure shift. It has traded this fair value gap, price, boom. The price went higher. When I was expecting dollar will go low, I I will get this run. When I got this run, I'm already profitable. After that, if dollar go higher or if dollar go lower, I don't care because I have already got my trade over here. So as ICT told, we don't predict the close. Where market, I mean where the candle will close, we don't care about that. We don't need to predict that. All we need is the prediction of the run. If I can predict market will go higher, I will take an entry into that run. I will close my trade before the run has ended. So you can see price actually came here. It has given you a chance to take your entry. After that, price went lower. Finally, price come here. I mean, it has taken the sell side liquidity by using the 8:30 news. So I guess it is clear to you now. Okay, I guess if it is not clear yet, then I will explain again, man. I don't have any problem with that. I will explain it again. No problem. That is my point that you don't need to predict the close of the run. You just need some run. According to your analysis, if you get the run, you are free to go. You are free to fly. Okay, I guess Ronald, just let me know that you got it or not. Okay, brother, can you chart Bitcoin? No, man, I don't trade cryptocurrency and I don't analyze the cryptocurrency. I don't do anything according, I mean, to the cryptocurrency. Okay, over here, as I can see, market we have sell side liquidity over here. We let me go to the daily chart first. Now, before starting this week, can we go through midnight open concept, please? Yeah, I'll go, brother. Just give me one moment, okay? Before starting this week, I have tweeted that every single YouTuber are expecting market will go lower, and I don't know why I was feeling outside of them. I was feeling market will go higher, and it will reach at this fair value gap at least. Okay, that was my expectation before starting my this week. Okay, and if you would love to watch my weekly analysis, you can see that on. I thought I was in live. You can watch that live. I explained over there why I was expecting higher run and when I will I mean determine that market will go higher. So I was actually expecting higher run. Now from higher time frame, I'm getting my higher run. If I go to lower time frame like 1 hour chart, if I come here, I can see from 1 hour chart, I have very clean sell side liquidity over here, clean sell side liquidity over here. And this buy side liquidity is actually from daily chart. Very near, I have only this sell side liquidity from hourly chart. This only sell side liquidity is my concern now. Why? Because market is very near to the buy side liquidity. If you just see over here, market is over here, okay? So the buy side liquidity is near about 744 handle. The sell side liquidity is near about 1000 handle, okay, or 1200 handle. So market is very near to the buy side liquidity. It has broken the last parabolic gap from the daily chart. All of this thing actually telling me that market would love to go higher. It should follow the higher time frame. This is my thinking, okay? It is going higher to take that buy side. But from lower time frame, only from the hourly chart I can see this sell side liquidity. Now I will observe the price over here right now. You see, this is the 15-minute fair value gap. Okay, so I will just mark this 15-minute fair value gap. This is dollar index. So market has taken some liquidity over here. Then I got the market structure shift. I will see this is my market structure shift. This is the fair value gap. If price can come here and if it can go above that high one more time with displacement, I'm pretty much sure market is going toward that buy side liquidity. Now, if market can break that fair value gap, this 15-minute specific 15-minute fair value gap with a run, with on candle, a big run displacement, I will start to think market is actually going toward that sell side liquidity. Finally, it will reach to that 15-minute fair value gap. So this is the condition. This is the situation right now for me. I am in indecision right now because from higher time frame I am getting the confluences that market is going higher. It is going toward that buy side liquidity. From lower time frame, market didn't finish its job over here. It didn't take that liquidity. Instead of that, it has made relatively equal lows. When it has made relatively equal lows, it it has actually created a situation to think one more time, brother. If I would love to go higher, should I take the sell side liquidity first, or should I go higher and take that buy side liquidity later after trading all of this fair value gap? Okay, there is the daily fair value gap, there is the weekly inversion fair, sorry, there is the weekly fair value gap, there is the monthly inversion fair value gap at that level. Okay, so when market will take that buy side liquidity and it will start to reverse from there, this will be my target. This sell side will be my target. There is some other sell side liquidity here. This will be my target. This will be my target when it will start to reverse. So it is actually keeping that open like that way because of later bias. Now from higher time frame to lower time frame, this was the daily fair value gap. So I should look the price from 15-minute chart. When I came here and I saw it's broken, the daily fair value gap, it's broken already. So it is clear broken. It's not fake breakout. It is telling me that okay, actually market is not going lower, it is going higher because last fair value gap failed to hold the price. When the last fair value gap failed to hold the price, if I see buy side liquidity, I'm confident that market will go higher. So from higher time frame or comparing daily chart to 15-minute chart, I am getting confirmation that market is going higher and taking this buy side liquidity. All I need some more information. I just would love to see this high will be broken by a big candle. If it can do that, market will come here toward that buy side liquidity. Now, if market come here, then it retrace, it come back again to take that sell side liquidity. I don't care about that because I just need a run. If I can get a run, I will obviously get a chance to take my entry over here. Okay. So at the same time, if you see the NQ, okay, so this is the last fair value gap from 15 minutes. Now there was the fair value gap from daily chart in dollar index. So we should see the price action from 1 minute chart, sorry, 15-minute chart. And here we have this 15-minute fair value gap. So we should look the price from 1 minute chart. Now from 1 minute chart, I can see last fair value gap actually failed to hold the price. Only thing I'm confused is it went lower to take the sell side liquidity. So I have to wait for some more confirmation. What is that confirmation? That is, market came here, it has traded some fair value gap over there, then it went lower. Is that liquidity taken or is this my market structure shift from higher time frame? If it is my market structure shift, then this fair value gap should hold the price. Now you have a breaker over here, low, I mean sorry, high, low, higher, high. Okay, so this I will accept the price come until this breaker. If I see the last fair value gap or this fair value gap fail to hold the price, market started to go higher, I will start to think actually market is going higher. I mean, it is going to take that buy side liquidity. At the same time, dollar index will start to go lower. And if you remember, the 15-minute fair value gap will fail to hold the price. That should be my expectation. So this fair value gap is now important for me. I would love to see how it reacts. What it can happen, it can come here, it will go lower. This low, when this low will be broken, I'm pretty much sure this was not the liquidity taken. Actually, this was the market structure shift. So this is the situation. This is the way I read the price. There's no other way. I don't think so. Is there is any other way? Okay. If I tell you market is coming here, market is going there, that is kind of stubborn things. I don't like that type of things. Okay. I can expect something very confidently, but I can't tell you market is going over there. So I always have to depend on the price. Can you go through midnight open? Okay, the midnight open is this is the midnight open. Before 9:30, market is below the midnight open. So in my opinion, this is all the manipulation. Depending on the midnight open, if you have already watched my midnight open video, I told you you can't take your decision depending on only midnight open. This midnight open will help you to determine that you are right, your expectation is right or wrong. Okay. Now, as this situation, I'm confused until this is not broken. This travel gap is not broken, and don't get the price over here because I'm delayed 10 minutes. Okay, I have the delay for 10 minutes. So if this travel gap fail to hold the price, I will start to think, okay, so I got the manipulation phase, also London session lower run, everything perfect. Market is below the midnight opens. This is the manipulation. Market should go higher toward that buy side liquidity. I will start to think, and this midnight open will help me to be confident that brother, whatever you are expecting, you are right. Now, if market would love to go lower, as today is the expansion day, okay, don't forget that as today is the expansion day, we will get only the expansion. Okay, if market start to go lower, I just avoid the midnight open today. Okay, nothing work 100% of the time in this trading market, nothing at all. Before 9:30, if you see the price is below the midnight open, then you will start to think this is the manipulation, price should go higher, it should go higher. How long it will go, I don't care, but it you will get some kind of higher run. If you have very clean buy side liquidity, then it will go higher. If you see before 9:30 or at the level of 9:30, market is above the midnight open, you have to expect, that is kind of the expectation, okay, that market will expand lower. When you will take your decision, by other price action, by your narrative, by your bias, by everything else. Okay, this is kind of the confluences. Like over here, this parallel gap is kind of a confluences. It will tell me that market would love to go higher or market would love to go lower. Like this low is important for me right now. Why? Because this low is actually liquidity taken. This is the sweeping liquidity. Now, if I see a big run below that swing low, then I will start to think, okay, this is not sweeping liquidity. This is actually, it has actually shifted the market from here. It has been shifted the market. So I won't see this as a liquidity taken. I will just remove the sell side liquidity. I will mark it as a what to say, the market structure shift, and price came to this parallel gap or maybe to this breaker, then market is actually going lower. I will try to find a setup over here, and my until this parallel gap price reach to that parallel gap, I will try to hold it. So this is the thinking of New Year midnight open. Hello, bro. When will you be getting real-time data? Ministry, the problem is I'm in Bangladesh, and from Bangladesh we can't recharge. Okay, we can't buy anything by dollar. The bank actually don't give us the permission to pay the money for buying the data. So that is the problem. That is why I am not getting the real data. And another thing is, I have the Portuguese credit card, but when I try to buy it by my Portuguese card, they actually send a OTP to my phone number, so to my Portuguese number, okay, in Portugal. So the SIM I can't open it in Bangladesh because it doesn't support over here. I'm not getting the OTP as well. Now I am kind of, I'm helpless, something like this. Okay, I'm just helpless right now. I'm just trying. Actually, I told my brother, to two of my friends, to do it for me. But the thing is, actually, I think they're busy right now, so they forget or something. So I actually told them two times. They didn't do it. I feel not to tell them again, and that is why I'm kind of level in helpless. I'm just waiting to find it out. How can I do that? That's why I don't know when I will get real data, but I guess very soon I will get it. Okay, by anyhow I have to get it. So this is what it is. Sorry for that, man. I know it's It's kind of shit. Right now, price is actually holding this fair value gap. I mean, this fair value gap is actually holding the price. If this candle can go above that high, that is the sign market is actually going toward that buy side liquidity. Now, it has to reach over there? No. As I have shown you over here, when I get a little run, just two candle, that was enough for me to get my buy run from NQ. Same thing over here. If I see market went above that high, I'll be confident. I will try to take an entry at that level and I will close it at that level. Enough. It has failed, so it went through this parallel gap. That's cool. I'm going to change my direction, and this midnight open things actually going to support my idea that is this is the fake run. Market was going above the New York midnight open. It is actually going lower toward that sell side liquidity, and finally this 15-minute fair value gap is the most obvious level below that sell side liquidity. It will go over there. So I have kind of situation 50-50. Market would love to go higher or market would love to go lower. If I go to daily chart, from daily chart, I'm expecting market will take that buy side liquidity. That was my expectation before this week. Okay, just look at my tweet, look at my daily, I mean weekly analysis everywhere. I was just telling that when everyone is expecting dollar will go lower, why I am feeling dollar is going higher. I have no idea why I'm feeling, why my market analysis is not right. I think I will be wrong, and being wrong sometimes it's okay, but I don't want to change my expectation influenced by others. So I have tweeted that as well. From my high time frame, I'm expecting market is going towards that buy side liquidity, but from lower time frame, I have to just wait how it reacts to that fair value gap. I have to wait to see that. This swing high is important for me right now. If it can go above that swing high with a very strong run, I'll be sure that market is actually going toward that buy side liquidity. It is going to leave that sell side liquidity like that way for later use. Okay. I mean, when market will come here, I guess it will reverse from there. When it will start to reverse from there, then this sell side liquidity, maybe there will be some other liquidity level that all of them will be triggered. So this is my expectation from here. Okay, can you use another login details in Bangladesh if it is paid from another account, another country? I can do something from the UK if so. Thanks, Robbie. Thank you very much, brother. But let me find it out. I mean, I guess very soon I will get the data. Okay, just give me some more times. If I can't, then I will let you know. Okay, but thanks for the offer, man. Thank you very much, brother. I guess I will sort it out. Okay, very soon. I mean, just give me this week, maximum one to 2 weeks. I will get the data. By anyhow, I will manage the data. So thanks, man. Thanks a lot. I will go to US 100. So this is the US 100. Market went lower. It went much more lower. That's cool. What time is it now? Okay. So this is 9:30. Price came here. It has made relatively equal highs. So this is the relatively equal highs. Now I have so many buy side liquidity and price is over here. Right now, I don't think so. I have anything to do. I don't have any sell side liquidity. As I told you, from 15-minute chart, I don't have any sell side liquidity. Nothing I have except this 15-minute fair value gap. So depending on the fair value gap, I'm not interested to take sell. But it is the expansion day. So if it is the expansion, if it starts already, I'll be cool with that. I'm not interested to take sell. I'm only trying to, I will try to get buy. I will wait until 10 because it should not go lower. Now, I will at the same time, I will wait for the dollar index because right now dollar index is in indecision. Okay, though I'm getting the lower run, I mean big run for the NQ. I'm not I'm not hurried to take my decision. First thing first, I need some kind of confirmation from dollar index. Is it really would love to go higher, or is it going to break that level gap? If it would love to break that level gap, I'll be happy because my expectation will match. If it failed, instead of that, if it went above that high, then after then I will be interested to take sell in NQ. Though there is no sell side, perfect sell side liquidity from for the NQ. I don't know if I take a small scalp, that will be cool. Okay, over here, and that can be the Judas swing because this run is very clean, sharp run. Okay, so at the 9:30, if ever if you see this type of sharp run, you will start to think, oh man, this is clean fake breakout. Okay, something like fake, I mean fake move or the Judas swing, whatever you say. Okay, that is my experience, that the things I have seen in market most of the time. So it went lower, I will see this as a Judas swing. So market should go higher because I have very clean buy side liquidity now. I don't know from NQ is there any very clean buy side liquidity or not, but from US 100 it is very clean. So I guess it is also clean from NQ. I will wait for here. I would love to see any kind of sign to go higher, if it can go high or not. At the same time, I would love to see it won't go above that high. See this high? I don't want to see it will go above that high. It change the color. If it went above that high with this type of run, I'll start to think, okay, market is actually going higher, not going lower. The higher time frame, the daily or the weekly, they are actually calling the price because I have this buy side liquidity. They are calling the price. Brother, please left it like that way. Later we will go over there and we will take that. Okay? This should be the expectation from the price action. You can just take your decision depending on your expectation. You have to wait for the further price action or further information. Very difficult now. Okay. So from 15-minute chart, I have only this 15-minute favorable gap. If it fails to hold the price, I guess it will reach either to that favorable gap or this favorable gap before before taking that buy side liquidity. If price reach that liquidity, I mean that favorable gap to that last favorable gap from 15-minute chart, if price can reach over there before taking that buy side liquidity, I'll be happy to see that. But if it has taken that buy side, I mean price has already above that high and it is actually went through this 15-minute favorable gap, I'll stay quiet. I will wait for more information. For more information, all I need to see is when it will be above that high. At the same time, price has to break that favorable gap. So that two things has to happen at the same time. This favorable gap, okay. I guess it has already broken this sell side liquidity uh from NQ. So it has broken this, I mean favorable gap, and it went much more lower. Can you explain high low liquidity and resistance run, please? Meaning of the exchange must both go higher or lower. That is simple, man. I mean, always we expect opposite run. If dollar is going higher, it should go lower. If dollar is going lower, it should go higher. Sometimes you will see dollar is going higher, it is also going higher. And both of the market has only the buy side liquidity, no sell side liquidity. So both of them are going to take that buy side liquidity. At that moment, you will see the seek and destroy mode. You will see high resistance. It is also called high resistance liquidity run. It is also called the choppiness. Everything you will see at that moment when you have only the buy side liquidity in both market, dollar market and the NQ market. So both of the market you have the buy side liquidity or you have the sell side liquidity. So they are going to take that specific sell side liquidity or the buy side liquidity all together. If you see it is going to happen, for example, you are now expecting market will go low. Okay, it will come here to that 15-minute favorable gap. You are just thinking like that way. At the same time, you are thinking market will go toward that sell side liquidity, and it is actually uh, showing you the sign that market is actually going toward that sell side liquidity. Then you will start to see the consolidation. You will start to see that market is actually going very hardly toward that 15-minute favorable gap. Can you tell me, I mean, do you see anybody close below this 15-minute fair value gap? Can anybody just can you tell me the body closed below the 15-minute fair value gap or not? From dollar index, I'm happy to see this type of lower run, okay? Because it is kind of sign that no market would love doesn't want to go higher, it would love to go lower. So this is the sign I really want to see, and this is the thing I want to see, okay? From there, where is it exactly right now? It's close below that fair value gap. Okay, that's cool. I guess price is actually trading the last fair value gap from 15-minute chart. I guess so. Okay, I'm not sure, but I guess something like this. That's cool. That means this is a level where from where price can retrace. No problem. All I need is the sign. Market would love to go higher. That is the sign. Okay, I want to see that. These two market you have to watch together. If you can watch both of them in together, you will get more confirmation or more, you know, perfect entry. So sometimes you will see like yesterday, I just came to the market at 9:30. I take a sell because that was more obvious. Then I told you that we are going higher. So everything was more obvious. But over here, the situation is very difficult. Higher time frame is telling you market is going higher. Lower time frame is telling you, no brother, I have some liquidity, unfinished business over here. So I would love to finish it first, then I will go higher. Or maybe I will go lower. That is different thing. So in that type of situation, you have to wait. You have to wait for more information. You have to level now. Here is your fair value gap. Here is your high. You have to watch both of those level, and both of those level will tell you where market is actually heading. If you see it's broken, market is heading toward that buy side liquidity. If it is broken that fair value gap, it is going to take that sell side liquidity. Now you can ask me why this high is important now, because when price went higher, that was the buy side liquidity. Price went one more time and you can see a week price went higher, just take that high, then went lower. So this high is now important to observe, because this was the shallow run. I was thinking this is actually liquidity taken. Now if I see a body close above that high, that means that is the sign this is not actually liquidity sweep. This is the this that was the market structure shift. Price has traded that fair value gap, it went higher, then this water block level will be more obvious. This water block, I'm not sure it will be the water block or not. If price can go above that high, and if it can close above that high, this is the water block level. There is much more possibility price will come to that water block level. There is actually two level. This is the water block opening, and this is the close. So I would love to use this one, but that is also valid. So price will come back again any of those levels, or maybe at the middle of the level, then it will go higher. That is the more obvious two order block level. So you have to watch this and that all together. Okay, at the same time, okay, I got the confirmation as this is okay, as this is the extension day. So I love to see. So it has to break this fair value gap. If the body can close below this fair value gap, I am willing to take myself. Why? Because this is the expansion day. I think my next fair value gap is over here somehow. I won't put the stop loss because this is not precise in what to say. The stop loss has to be. That should be the stop loss. Or if you are more conservative, you can put it over there. It's up to you. But I will go with this. I'll just cover the breaker. Okay. I mean, this is the breaker, low, high. I mean, so not over like that. No, this is not breaker. Then I see. Okay. As this is the expansion day, I would love to see it will be the I mean the expansion. I mean, market went lower. The school has taken some buy side liquidity. This is the retracement. It should expand lower until here. That fair value gap. Okay. If you remember, there was a fair value gap from 50-minute chart. You will just mark it from your NQ. Right. Nothing. I will take some partial. I will put it over there 1.5. Now you can say, brother, it is very actually a small trade, but the entry should be there to there. That is near about 25 handle, and if can come here, it's near about 48 handle. Okay, it's not small, it's huge. According to me, I would love to see this will work as a breakaway gap. I want to see this as a unfilled. At the same time, I would love to see. So it has broken over there. Okay, you see this high, it went above that high. That is the kind of confirmation that market is actually going higher. It is not interested to take that sell side liquidity from dollar index. Now, when I saw this candle, I actually got the information over there. And when it closed over there, it failed to close over there. When it closed above that, this is the confirmation. But when this candle closed above this order block level, already I got the entry from the order block level. So this high is the order block level. Though market didn't come here, I'll be happy with that. It has actually traded the order block high. Okay, this candle close over there. This candle. If I go to 1 minute chart, you will understand what I mean by that. This candle went above, come back, started to trade from there. I got the I mean trade over there. Now this is the system. Okay, you have to see the price like that way. If you don't see the price like that way, it's very difficult to trade. I mean, I don't know what to say. Now I took a partial over there. I'm going to put my stop loss to my break even. Okay, if it hit me now, why I'm not no, not there? Sorry, give me the order block retest. That is the water block level. It can reach until this water block level or the 50% of the water block. So that is the 50% of the water block. That is the mean threshold. It can reach any of those levels. I won't mind and reach the mean threshold. My stop loss will be here, just above the water block. Now I don't want to put this on because there is a spread or something. So I will be stopped out before even go to that level. That is why I'm just putting this thing as my stop loss. Okay, if market can touch that on, I will just close my trade because I will take that as a loss. It is coming here to this order block. I'm happy with that. I'll just mark the lower level as well. So this is order block as well, and that is the order block as well. So there is two level. This is one, this is two. Any of those can be traded. What I want to see right now, I want to see one candle will pass through that low. One candle, not too many candles. Just one candle will pass through that low. That is the thing I would love to see. If market would love to come here, it has to do that. Now this candle, it did fail to do it. Very next candle, it has to do it. If it didn't do it, then it has much more possibility to trade the min threshold. Though I'm not getting the perfect price action from here because this is the Nasdaq, I mean US 100. So you will see the information from the US, I mean the Nasdaq, okay? Because the actual price action is over there, not here. Okay, that's cool. This candle, if it would love to trade that order block level, I'll be happy with that. Or the min threshold, I'll be happy with that. After trading those, has to break. Whenever it would love to go lower, it has to go with a big candle. One candle will go through that way. Now, this entry is not valid for Wednesday, I mean, sorry, from Monday, Tuesday, Friday. This entry is not valid. This entry is only valid for Wednesday and Thursday. Why? The reason is you have to watch the narrative. The narrative is market went lower, retrace, lower, retrace, lower, retrace, lower. This is the expansion phase, okay? So when I see market actually fall, this all the time when market should go higher, but it failed to go high. Instead of that, it went lower. It broke that last parabolic from 15-minute chart. That's cool. I took my sell over there. Should go lower. This is the retracement. I'll be okay with that. Should go lower until it will continue to fall. Okay. This is not even the chasing price. This is the narrative. If you just go to my YouTube channel, there is the folder called narrative. Okay, there is only 5 video: Monday, Tuesday, Wednesday, Thursday, Friday. 5 days narrative. If you watch that 5 video, you will understand every single day how you will expect the price action. It will help you to understand that. Okay. Now this is not good. It has taken that low. Now it is going higher. This is not good. But what does it mean? It means it can actually retrace much lower, I mean much deeper to that specific parallel gap. It can do that. I want to see body close below that low, some kind of boom, something like that. If I see it started to go higher one more time, when it will come to the min threshold level, I'll just close my trade. Maybe that will be little loss, though it actually take my entry over here. It should be here at that low. It should be there, but it is what it is. Okay, I just want to see it will go through this low, not this type of sell side liquidity table. So that's not cool. Hey sister, if it can reach to the min threshold, I mean body close above the min threshold, I won't wait to hit my stop loss. I'll just close my trade. I'll just see the body, how it react over there. Min threshold trade is okay, perfectly it's okay. All I want to see how it react over there. So I don't need this order block level because price has traded that order block. That's cool. Min threshold trade, that's also cool. All I want to see big run now. Just big run. Boom. Something just it will drop. If it fail to drop, I'll close it. Okay, so it should not go to the min threshold one more time. So my stop loss is at the break even, or I can just take it more, I mean here at the break even. If it can reach to that order block one more time, I will be stopped out to my break even because I don't want to see that. This is the expansion phase. Today is the expansion. I don't want to see some kind of sloppiness over here right now. I want to see boom, something like that. See this candle, that was my expectation over here. This type of big run. This is my stop loss. Okay, don't forget. If it can touch that low, I'll just close my trade. Now I will just mark this low because this is the last low price is made. It should go through this low now. Dollar is going higher, so it should go low. Sitting 150-minute fair value gap now. So are you telling me that 50-minute fair value gap is over here, Steve? I actually got the 50-minute fair value gap over here from what to say, the US 100, because the fair value gap is over here from this, I mean 50, I mean US 100. Okay, so I can see the 50-minute last fair value gap is over here. That's why I put my target over there. But if it has reached to that 50-minute fair value gap, then there is no reason to hold the trade. I mean, if it is already at the level of the 50-minute fair value gap, there is no reason to hold the trade, because that is the more obvious level. You have to close your trade at that level. Let me show it to you from NQ, from here. So there, so it has already broken that 15-minute fair value gap. That's cool. There is no other fair value gap except this fair value gap. So I'm actually talking about this fair value gap. This is the last fair value gap from that leg. Talking about this fair value gap over here. If it can reach over there, you have to close your trade. There's no other way. I don't know what is actually going over here. I mean, it is what it is. But I mean, price has already reached that level in that fair value gap. Can you confirm me that price has actually reached to that specific fair value gap? Yes, fair value gap from 9 January, but I'm looking at M and Q. Maybe it's different. Can anybody please check that price has reached to that fair value gap or not from NQ? If it has reached in that specific fair value gap, there is no mean to hold it, because I have to watch the price again, how that last fair value gap reacts. So I have taken the one partial, so I can hold it, because the last fair value gap, if it fails to hold the price, I mean the last fair value gap over, if it failed to hold the price, then this low is more obvious. Going to take that low. If the last fair value gap failed to hold the price, then this low is more obvious. Okay? So you can actually think, I mean, if you have already taken some partial over here, then you can hold it until here. Okay, I mean, if you have any opportunity, okay, though I am not recommending you to hold it until here, you should have closed the trade when it will reach to the last fair value gap, because it's huge, man. If you just take your entry to that fair value gap, if you hold it until here, it's near about 4800. Now just multiple $20 by 4800, it's near about $1000. Yes, it reached it and trading around the CE. Okay, then I have to close it. I mean, I don't want to, I'll just put my stop loss more safely. I would love to see some level there it should not go. So I can see high, low, higher, high. So I'll be stopped out. If it can reach over here, I'll be stopped out. Okay, this is random. I mean, you see the consolidation. If it is inside that last level gap, that is expected. The consolidation is expected, as you have told that it is actually working with the consequent encroachment, so it is actually struggling to break that last fair value gap, because every single time the last fair value gap is very important, very important. As I have taken some partial, so I'll put my stop loss over here. If it hit me, I'll be happy. If it doesn't hit me, then I'll go maybe until here, because this is more obvious. Or maybe I will kill it over there, because this is also some kind of level. Let me show it to you. This is the standard deviation. If I use the standard deviation, this is actually 2.5, though this is huge. 2.5, I can hold it until there. Okay, so it is what it is. And remember, this is the expansion day. Expansion means price will go lower, retrace, boom, retrace, boom, retrace, boom. It will continue to do that. And this setup, again and again, this setup is valid only for Wednesday and Thursday. You can't use this setup any other days. You can't do it. That is for sure. Full target profit. The low. That should be the full target profit, man. Just let me show it to you. You see this low? This should be the full target profit. This one. That should be the full target profit. If only if you see market went through that last travel gap, body close below that travel gap, then this is the target. So there is no other way, okay? But it's been a long, I didn't write it down, so I'm gonna write it down. So I'm not that much good. Boom. I'll just make it 40. That is the thing. If I go to dollar index, remember what I was expecting, this high. I told you if market can go above that high with big run, something like this, there is this buy side liquidity is more obvious now. Now, if market would love to come lower, obviously it can come, no problem with that, because I have this water block, I have this level as well, and I have the mean threshold. So this is the mean threshold, as this is at the same level, so I'm not going to mark it. Okay, so this is the 3 level, so price obviously can come over here. I am not interested to hold it until here. I just need a run. If I can get a run from there, just two candles. See, this two candle has given me the trade over here. It can retrace too far here until that travel gap. It can do it if it is inside. It is from the last travel gap, or it can start to run for high now. It can do it as well. I would love to see how it reacts to the last travel gap from 15-minute chart. This is the only thing I would love to see, because this can be the fake run. The real expansion can start happen now. When this travel gap, the 50-minute travel gap was broken over there, look which candle I have to. Look at this candle. Okay, I took my sell over there. Now it is because of the spread, whatever. But that was the candle I took my sell. Why? Because this candle has broken the last travel gap. If it is the expansion day, if I am right with my everything, it should reach to the last travel gap at least. It should reach to the last travel gap. After reaching over there, then it can do anything else. I don't care about that, because until here, I'm okay with that. I'm perfectly okay with that. Do you guys understand what I mean by that? And look over here how it has traded. The mean threshold came to the order block, and the mean threshold, both of them actually hold the price. If it can go higher, I won't be surprised, because it can take in the liquidity. It can be liquidity taken, or it can be actually it's going toward its real direction right now. Okay. Does NQ 1 minute buy sell liquidity is obvious? Oh man. Uh, how to explain this thing? Man, not. I mean, I can see only the buy side. As I told you, I can see only the buy side. There is no sell side. Nothing over here except the last parabolic from the 50-minute chart. So I'm over here. Okay. See, I have the buy side liquidity. I don't have any sell side liquidity. Nothing. Now, when market is going lower, I would love to see any last parabolic will hold the price. Here was one. Here was another. Nothing hold the price. So this is the last parabolic gap above that low. This is just a low. This is not liquidity level. This is just a low. Price come over here to that last parabolic gap. I will watch how it react over there. If it fail to hold the price, 99% of the chance market will take that liquidity. There is 99% of the chance going to take that liquidity. After taking that liquidity, I have some fair value gap over here from higher time frame as well. So that is different matter. If market would love to go higher, that is the perfect place to go higher, high. Yeah, it can go little lower. Obviously, it can go, but that is the perfect level from where it should go higher. Why? Because I have buy side liquidity for that. Very clean buy side liquidity. One, two, three, four highs at the same level. All the retail traders they took sell over there. So this should be the target. That should be the real run for Nasdaq. Why it is going lower? That can be the fake move. Today is the expansion. So we will expect the expansion only. Maybe this is the fake or Judas swing. After that, I will see how it reacts from there. When I will see the reaction from there over here, okay, I will see the reaction over there. And if I see it is actually would love to go higher, I will wait for some kind of confirmation. When I will get the confirmation, if price can go far away from this area, far away, then I will start to think market is going to take liquidity. I have this buy side liquidity from 1 minute chart. Okay, this is the buy side liquidity. I'm going to remove this sell side liquidity. There is the buy side liquidity. When I will start to think market is going to take that buy side liquidity. See, price has made some kind of swing high over here. Maybe market went lower, little bit here. It went higher again. Am I thinking that market is going to take that buy side liquidity? No, I'm not thinking that. As this is the expansion day, it can come here to take this buy side liquidity again. Maybe it is going to trade that last parallel gap. Will trade that last parallel gap, then boom, again expansion. So I would love to see it will go above that height because this is a swing leg. This is a leg, so it has to go above that height. Then I'll be confirmed that maybe market is going to take that buy side liquidity. I have to watch the price again over there. From here, I just can't tell you market is going to take that buy side because that is more obvious. No, I can't tell you like that way. Nearly impossible. We have to see the price. See, market went higher, just cool, it just fall. Boom, it has fallen. What does it mean? Our expectation was this sell side liquidity. Now, this was the fake move. Market was everything was over there. I told you market when market will go higher, you will go for the sell. I showed you how to take your sell depending on the narrative, depending on the last parallel gap, depending on the every level. Now it fall. Am I afraid of that? No, I'm not afraid because this is our real liquidity. Now if you see this is a line, what is that? Nobody asked me. Nobody asked me actually. No problem. I'll show you. This is the 4 hour chart. This is the fair value gap from 4 hour. Okay. So that high is the low of that candle. That specific candle low. So that is the high of the 4 hour fair value gap. All of you know I don't go to the 4 hour chart except dollar index. So in dollar index, I go daily, hourly, 50 minutes. I don't care about 5 minutes, 1 minute from dollar index. So if I'm confused about the dollar daily chart, I go 4 hour chart. From 4 hour chart, I saw this fair value gap is more obvious. So I have marked that high as my fair value gap high. So actually, nobody asked me that question. Now, see where price actually reached at the level of the high of that fair value gap. Now it's broke. Boom. I'm going to close the order block level. Okay, I'm just going to close the order block level. So this is the order block level. What price is down? It has broken this fair value gap. Look at this fair value gap. It has broken this fair value gap. It has broken the order block. It has broken the mean threshold. What I have right now. What I have right now. This fair value gap. What else I have? This swing low. There is a swing low here. Is it market structure shift? I'm thinking like that way. Maybe this is the market structure shift. I have to wait for two more candles. The very next candle, if it can make another fair value gap, fair value gap over here, I will expect market will trade that fair value gap. This sell liquidity is going to be taken. Okay, you are the man. Hey George, I'm the man. Thank you, man. Did a nice take profit. Thanks, man. Thanks for that clarity. Uh, okay, thank you, Hubs. I pronounce your name wrongly, I'm sorry, brother. I guess you are new to my channel because I didn't see your name before. I'm kind of burger guy. Okay, so so this is the dollar index and price is falling until here. I would love to see how it reacts over there. I mean, this sell side liquidity is more obvious, but as I told you, I would love to see when price will go above that high. I will be sure that okay, now is the time for the buy side liquidity. Above that high, until this high is not broken, I'm not sure because that can be the fake breakout. I mean, very next candle that can go above the fair value gap one more time. Okay, thank you. Welcome, welcome, ma'am. Welcome to my channel. Welcome to my fake breakout. Oh, man. Just let me go to the US one more time. So over here, the price has went above that high. Okay, just let me remove all of this thing from here. So, and let me remove that one as well. So just think the 15-minute last fair gap was over here. Okay, now price went lower, it has taken so many liquidity. Okay, just think this is the swing high. I got the market structure sheet over there. There is my fair value gap. Okay, just for your understanding. So this is the fair value gap. Price come here to that fair value gap. Am I willing to take my buy? No, man. I'm not willing to take my buy. Why? This is the expansion day. You have to understand the narrative. This is the expansion day. So price will go lower, retrace lower. I will see this as a deep retracement, deep liquidity taken. I will see how it react over there. If it would love to go higher, or the real expansion should be up upper way. Okay, it has to go above that high because that won't be liquidity taken, but this is clean liquidity taken. Okay, it has taken that liquidity. I would love to see how it reacts now. As the last 15-minute fair value gap is broken, I don't know how it has actually trade that last fair value gap. Was there any fake breakout, or it was actually broken the fair value gap? I have no idea because I'm in US 100. Okay, but if it is break, then this low is more obvious. Remember, guys, if it can go, I mean, what should done right now? What price should do something like this? If it happened, okay, if it come to this fair value gap, it started to go higher. Nothing to worry about that. If you really would love to take an entry, no problem. Take your entry to the order block level. There is your order block last down close candle. Just for example, if it comes to this fair value gap, you see displacement again, you take your entry to that order block and you target to that last fair value gap. There's nothing wrong with that, or maybe to that high. Eh, but brother, that will be very small run. Really, 36 handle, man. 36 handle, huge, man, huge. I'm happy with 20 handle. I'm happy for on day by 20 handle only. Two contract 20 handle. That's near about $1,000. I'm happy with that. It's near about 36 handle. Or if you just mark over here, if you go from that order block level to until to the level 53 handle. Oh man, are you kidding me? Just let me check it. Actually, am I talking you the right way or not? Okay, from here, just somewhere here, here somewhere, I think. Oh man, I'm gonna die. I'm gonna die. 67 handle, huge, man, huge. Now it is kind of the I mean confusion area. Though I am expecting higher run, I have clean buy side liquidity. I don't have anything. I don't anything below the market. I have nothing at all. I'm expecting higher run from the beginning. I took a sell depending on the fair value gap broken until that fair value gap. Okay, if you remember to that area, I mean when I was in US 100, I just marked my target profit to that fair value gap, the last fair value gap. Now it was different over there, so I as I have explained the market over there, so I took my trade over there the way I read the price over there. But from NQ, this is the real price action. All you have to wait, I mean all you have to do is you have to wait for this high broken, that is over confirmed area. Now if you would love to take an entry over area, this area, what you have to wait, you have to wait the market structure shift, price has to reach to this fair value gap or something that should hold the price. Then when you will see market has started to go higher, you will take your entry to the water block level or any breaker level or anything. Okay, over here when price went higher, it went higher. If you see, this is the breaker, low high, lower low, this is the lowest, I mean highest candle, that is the breaker. You saw market actually came to this obvious fair value gap, then it went higher. Okay, just go for the trade by that I mean, that breaker. If you don't know how to mark the water block, no problem. But where price is retracing, did it trade that fair value gap? No, it didn't trade. So you are not allowed to take your entry now. But brother, if market went higher without taking me, just to wait for another chance, man. One train just passed, thousand another train are coming, thousand another bus is just coming. You are not allowed to take your entry over here because you didn't get the confirmation that market is going higher. It can be the liquidity taken because today is Wednesday. You have to think every single thing. You have to put everything on the table together. You have to think about narrative. You have to think about the price action. You have to think about the dollar index. You have to think about the last fair value gap. You have to think about the liquidity. You have to think about the what to say the time. I mean the what time is it now exactly? Is this 9:30 open or is there any news? Every single thing you have to think all together. Now every other guy actually tell that, oh man, trading is too easy, and you are just making this complicated. If you want to be consistent, profitable trader, you have to do it. There is no other way. As I told you over here, I took a loss over there. I think George, are you there, brother? Uh, George, I was talking to him. So far, I remember. I took a buy over there because I was impatient. There was no need to take that buy. That was not even a setup. Nothing was over there. The real setup was over here, and it worked perfectly. It came here to here. See, I wasn't wrong about my thinking process or something. What I have done, I was just impatient. So I just took a loss over there. Here, I wasn't impatient, so I was in profit. I mean, what else? Other way. Here, I wasn't impatient, so I didn't take loss. I took my entry over there. I took partial over there. I took close my trade over there. Then at some other. Okay, over here, entry, close, simple man. I don't know why you guys think this is very hard to trade. No, it's not really so hard to trade. Well, everything is hard because we are thinking the hard way. How do I know market is going to take that liquidity? I will observe this level gap. If market failed to hold it and if it started to go lower, that low, if it's give me the sign, what is the sign? Some kind of big run, boom, that type of candle. I will look how this fair value gap react. I mean, if market can come here, okay, is there some kind of Mickey Mouse move like that, or this is a big clean sharp run throughout this fair value gap? If I see sharp run throughout that fair value gap, that is the sign market is going to take that low. There's no need to think that market is going higher. It has taken that buy side liquidity. This is the expansion there. We got the expansion, retracement. We are continuing to go lower. At the same time, if you see there is the last 15-minute fair value gap around this area, you just observe that last fair value gap as well. If you see body close below that fair value gap, just take your entry. But if it hit your stop loss, man, that's just a loss. Just a loss. Nothing. One loss is not going to tell you that you are a bad trader or you are a good trader. Okay. Welcome to ICT Trading. Thank you, man. Okay. So, alright, okay. I started following you Monday. Also, you are very new, man. Helps. You're very new, man. Amazing work, brother. Thank you, brother. Uh, Severed Akaria. No FX pairs today. Let me go to the FX pair for USD. I mean, I don't like this FX pair. In Euro USD, I only have the buy side liquidity and it has reached to the daily fair value gap consequent encroachment. Cool. I would love to see how it reacts over there. At the same time, I would love to see the index what it is. It failed to make the fair value gap problem. When it has failed to make the fair value gap, I'll be happy to see that. Yeah. So this is kind of consolidation over here for the liquidity market. If no, nothing. Liquidity, if nothing. The liquidity, I have the buy side liquidity, nothing. It's kind of the situation where you have nothing to do. See the price action over here, you have nothing to do. I mean, that is my opinion. Don't take it personal. Okay. So in GBP USD, I will say it has come here. This is a random level. Okay, I don't see anything over here. So why it stopped over there? It shouldn't stop over here. It should go at least to this level gap. Has to go over there, or this breaker or this point has to reach over there. If it would love to go higher, or if it would love to go lower, that is different matter. But if it would love to go higher, has to reach over that area. I mean this level gap. See this level gap. So that should be the retracement level. If I go to 1 minute chart, from 1 minute chart I can see it has taken all of this bicep liquidity. That's cool. Though there is no market, I mean the perfect market structure shift, but I don't go with the precision for the forex market. I will see this like that way. That is the water block level. So it should reach to this water block, then it should expand lower until this travel gap. Something like this, okay? And now don't push your button depending on me, because I told you that I don't trade forex market, but my expectation is something like this. Come here, then it will come lower. Something like this. That is my expectation. I guess if you are a GBP USD trader, you will get something from here. Yep, I don't see anything. I mean, much more obvious, because buy side liquidity is too far. Even if it would love to go higher, it should reach to this level gap first. It has taken the buy side, I mean sell side liquidity, market structure shift. This is the level gap. So market has to reach to that level gap before even expanding higher. If even if it would love to go higher, I won't be argue with that, but it has to reach to that area, to this level gap first. Depending on that, I can expect that market has taken all the buy side liquidity. Though I don't have market structure shift, I don't expect the perfection from here, from forex market. I will say just this is the fair value gap, this is the water block. It should reach from any of those level. It will trade, and then it will come toward that liquid. I mean this fair value gap. Okay, I guess it's enough for here. If anybody is interested, gold. Gold is also falling. It has reached to the consequent encroachment of the daily fair value gap. We can have some kind of retracement or reaction until that fair value gap. Then it can expand lower, or it can continue to expand lower. I mean, I don't know how actually people do this type of how to say, the analysis by wall market. It's really difficult for me. I don't know how to do it altogether. I mean, every single market has I mean different type of direction. Okay, so it came to this parabolic gap. That's cool. So there is no order block, nothing over here. And previously there is this order block, but right now I don't see any order block. But if you see, all of these are consecutive order block level. I mean, if all of these are the consecutive order level, consecutive down close candle, then this is your order block. This is perfect to take your entry over here to this area. Your stop loss will be below this parabolic gap, and your target should be here, something like this. Okay, and if you want to see like this way, just taken all of this liquidity from there, and if you wait for the market structure shift over there, then you will go for some kind of parabolic up over that area. I mean, if you don't want to take your entry over here depending on that order block level, then you can take your when it will be shifted, then you can take your entry over there until it reach to that specific parabolic gap. Every information has to be from NQ. Okay, this entry, every single thing should be depend with NQ, something like this. You can go below the breakaway gap, you can go below it. I was actually as I have nothing to do, so I was actually thinking how many winning trade or losing trade I can take in 1 week. So you can see in Monday, I think it's Monday, yeah, 16. So that was in Monday. This two trade was in Monday. This one, two, three today. Yeah, no, not three, two. Sorry. This two trade was in Tuesday, and this all trade, this four trade. I mean, this is not four trade. This is actually three trade. One was losing, and two was winning trade. And as I take partial, so one trade actually takes the place for two. Over here, I guess so. Okay, what time is it? I mean 20, 41, 20, 45. Yeah, that is one trade. 146, 149. Two trade. 312, 318. Three trade. This is also losing trade. Four trade, and this one is the five trade. So till now I got five trade. I took five trade and one losing trade. Don't look at the amount, okay? Because that's matter actually. Sometimes I take one contract, sometimes I take 100 contracts. So that's different. I don't need to see of the. I mean, I don't need to look at them. But until now I got five trade, and four was winning, one was losing. I'm not a good trader. I was thinking that how it works. That's why I didn't reset. Okay, actually I don't keep them on my chart. I actually remove them. But I was thinking, let's see how it works this week. Okay, I think guys, it's enough for today. I mean, I have already explained the price action for today. Though it's been a long, I didn't think I will stay like that way in this longer. But uh, anybody has any question? If you have any question, I will try to reply you. Otherwise, I'm gonna close my session for today. Okay, as I am little bit delay. I mean, I think 32-second delay, something like that. So I will wait for 32 seconds, then I will close my session if you don't have any question. At the same time, if you are new to my channel, you can subscribe to my channel. Don't forget to give me a thumbs up. Sharing my video, no, I don't recommend that because it's up to you. Nobody is willing to give me the like, so I don't ask for sharing my video. That's cool for me. But I will say, if you're new, you can subscribe to my channel. Okay, that's my request. If anybody has no question, I mean, nobody has no question, that is also your term to write it down. No, brother, it's okay, it's cool, or bye, write it down, something like that. Then I'll just close the session. Can you hear me, brother? Because you have already got me point. Thanks, bro. Okay, I think you're most welcome, guys. So I think you guys don't have any questions. So I'm gonna close my trade. I mean, session for today, and we will talk through my Twitter. Okay. So see you guys. Bye bye.